Hi, everyone, and welcome to our bi-monthly podcast with one of our chief sponsors, Noble Gold. And we have the one, the only Mr. Micah Haince, who is rejoining us. He had such a popular response from the one we did last month that he's coming for a reprise, and we're honored to have him back along with Colin, who will be joining us later this month. And Micah has chock full of wisdom, humility, and knowledge, and the subject of precious metals, IRA, and 401k conversions and the like. So we're going to pick his brain on a lot of important things going on, particularly in the areas of silver and copper and gold, respectively. So interested to see what he has to say about all that. If you're new to the podcast, please do like, subscribe, and share. Helps the channel grow and others to gain in the knowledge you're currently being afforded. As you may recall, for those of you who are new, Micah has over 10 years experience as one of the top sales representatives for Noble Gold. So he's entrusted by Colin specifically. He has a very robust client base that trusts him and works with him loyally on an ongoing basis. And that speaks volumes when people trust and respect you. I certainly know that firsthand. And that's why we asked Noble Gold to be our chief sponsor, because we do have trust in them. I have purchased my own precious metals through them for whatever that's worth to you. And so I'm delighted and honored to have back Micah on the podcast. Micah, how are you doing today, good sir? And Happy New Year.
Really well, John. Thanks for having me on. What a treat, and Happy New Year to you too. Yeah, it was busy. Nice holiday for us, some R&R, but we just had the third busiest December, or sorry, the busiest December by a factor of three. I've been kind of getting that
Wow.
confused. So that means we sold more in December of 2025 than any other December by three times.
Now,
Normally, we're welcoming the quiet kind of zone, like Thanksgiving to mid-January. Not a lot of portfolio action typically happens, but this year was different and the market was different, and we're obviously seeing that now. So everyone was just piling on. I think on Christmas Day, I got maybe a dozen emails of people, I need to buy. When are you back? When are you back? So it was a great Christmas, but it was busier than we expected. And I think that's a great way to start the year.
I agree. That's actually what I want to ask you, because from my knowledge, typically in the metal space, in past years, my understanding is December and January tend to be more of the lull months, but you're saying that it was an uptick. So
Yeah,
I'm glad to hear you say
huge.
that. Sorry, go ahead.
But just yeah, a huge uptick, right? Like a 3x for any given month, right?
Um,
That's like you don't expect that. So like I said, it's usually welcome and quiet, but things are different now, right? As you know, and as
mhm.
your audience knows, that we're coming into a different time. Things work differently. We're capturing the attention of people who never looked at these asset classes or at silver or gold before. So it's really, really nice to be in this kind of busy phase. And I think it's going to be a record year for all of us who already own it.
Yeah.
And still not too late for people to get in either. We'll talk about that, I'm sure. But
Mhm.
2026 is setting itself up to be like a record year for all of us. So
No, I agree. It'll be a
looking forward
banner
to it.
year. I did want to ask you on that sub before we go into the main questions.
Yeah.
In the 10 years you've been with Noble Gold, have you ever seen a December to January like this?
No, not a December or a January like this. Like I said, typical seasonality, busy, busy spring, busy, busy fall. So let's call it like February, March, April is a really busy, not a quarter because it's not an actual annual quarter, but a really busy 3 months for us. And then we'll have another September, October, November, very, very busy. Usually those are, my best months in sales. That's everyone's best month. So we kind of have that, busy spring, slower summer, busy fall, slower winter. That's the typical seasonality of the metals.
Mhm.
And you can go back and you too, I'm sure, like any investor, any client of mine over the last several years, 2020 we had the COVID crash in March. The metals went crazy that summer. That was kind of a unique thing. But 2021, 2022, 2023, 2024, 2025, the springs, so March, April, May, or February, March, April is always like kind of a rush time. And then once Labor Day kind of wraps up and people get out of summer mode, mid-September or October through till pretty much Thanksgiving can be another very busy time. Last year with the election was like that. The last several years have been like that. So that's a typical seasonality. We know that no one's thinking about their portfolio um, after Thanksgiving or through December in preparation for Christmas, and then you got to kind of shake off the cobwebs as you get into the new year, and everyone's then like I said, mid-January, February is when everyone's now got goals and new financial plans and
Mhm.
things they need to do to secure themselves and their families, and so that's normal, but to get again, like just it was nice, but it was almost like kind of not an annoyance, but I'm like Christmas Day, dozens of emails, New Year's Eve, dozens of emails. I'm missing calls left, right, and center. It's like, guys, we're humans. We're at home. We're with our families. We're celebrating the holidays. Like no one's around to place your trade on the 31st at 5 o'clock. But the price was going crazy,
Yeah,
right? We had a
it
couple,
was.
we'll talk about that. We had like 10% up on Boxing Day and then
Yeah.
10% down on Monday the 29th, and
Hmm.
then 9% up on Tuesday the 30th, and then 9% down on Wednesday the 30th, right? So we just had these like crazy volatility. We're still seeing it now. But anyway, it's nice, and I think it's indicative of the trend, and it will only get busier for us.
I agree. And to your point, you alluded to it. I think 2026 is going to be a banner year because it's the golden age. President Trump has already, staked that proverbial in the stake into the ground and made that
Absolutely.
declaration. And I think
Yeah,
we're going to see that full frontal this year. So let's get
dude.
started. I'm sorry, go
Cool.
ahead.
Oh no, that's it. Great.
Okay.
Yeah, let's get into
So
it.
let's get started with my first question, just to respect you and the audience's time. So as you mentioned, the spikes that happened before and after the holiday period, reports say, and I really was curious to ask you about this because this was fascinating to me. Reports say the physical price of a silver ounce is currently around $115 in the UK, between 85 and 90 in China. In Japan, the premium spike was looking at about $130. While the Western spot price is under 80 for now, as we look at real quick, let me just show you this,
Do
Micah.
a little refresh. Yeah.
Yeah, do a little refresh. This is as of right now, 78.27 on silver, 44.56.84 on gold. If I look at the
Right.
futures markets, 78.17 and 44.67. So fairly parallel.
That's right.
Just so people can see our transparency, how long can the COMEX and LBMA keep their prices down when the rest of the world's silver prices are so much greater?
Yeah, it's a really interesting phenomenon, even just to have the spot price higher than futures, John. As you might know, it's a phenomenon called backwardation, and it usually means that like physical is in high demand. People don't really want the paper. So for your audience, just to kind of explain a couple of these terms, spot price is like the physical metal. Futures is a contract for future delivery potentially. So we kind of look at it as like the real price or the raw metal price versus like paper silver price. So when you have the raw or real metal price higher than the futures price, it means that there's like an immediate concern for physical possession. People want it right now. And that is usually something you only see in trading and in technical analysis. You only really see backwardation at a bottom. When something's dropped a lot in price and then you kind of figure out that it's resolving and it's bottoming, you can usually see backwardation for days, maybe a week or two, but it's not a trend that's like locked in and it's embedded in that type of setup. So we have seen backwardation for 2 months, almost like consistently. It's not something that normally lasts this long. It's again underlining, it's bolded, it's exclamation marks, asterisks, physical. That's what people want. So physical premiums, yeah, you look at spot and you say it's okay, it's $78, $79. Um, you are paying right now like maybe 85 for an ounce of silver with us, but you're paying, like you noted, 115 in the UK, 130 in Japan. I've seen 125 in the UAE, the United Arab Emirates. And so the reason for that is those places are understanding more than we are, and they're wanting that physical so much more. The demand is so much higher, and inventories are running so much lower that the cost of getting it into your hands and into your account is shooting up above the actual, melt value of having new bullion in your possession. So for us, we're still in a decent situation. It's the kind of early signs that we probably have inventory and supply issues here. I'm telling all my clients, no issues right now, right? I'm fulfilling every order. We did tens of millions of dollars last month in sales. We'll do another similar month in January. If you're looking to buy in the next 2, 3 months, I have no concerns about supply. But if I'm looking out 3 to 6 months or 6 months and beyond, I actually can't guarantee you that I've got a, what do you want kind of situation. It might be, here's what I have kind of situation, which you don't necessarily want to be in. want to get in now, get what you want, get what I would recommend you, but I might run out of those things. So we just need to see how that goes. But again, I think it's like the cost of actually owning it is a lot higher than what people think and what the paper price suggests.
It is a phenomenon, the backwardization. We've touched on that before. Thank you for giving some sort of rudimentary process for that for the people to know
Yeah.
that's what is effectuating the price amongst other things. And you mentioned a very good point, delivery. I'm always telling my audience, price is one thing, but if you can't get it, what does it matter? We go back to, a few years ago with COVID, with toilet paper and paper towels, people didn't
Yeah.
care what the cost was because they had a supply
Yeah.
issue.
Oh, exactly.
This is
Yeah.
much more problematic when we're dealing with the state of the economy, to your point, which
Right.
actually, Micah, brings up a great and appropriate segue with what happened over the weekend with respect to Venezuela. What I
Mm.
don't know if everybody's aware of, and you can articulate this, there are rumors that about 247 million ounces of silver is missing from Venezuela reserves after Maduro was apprehended. There's also speculation that the U.S. seized it or that it was flown to Russia or China a few days prior to the attack. What is your assessment? And if that is true, what impact does this have on the global silver market?
Yeah, let's assume it's true. And I don't know if there's any like real institutional verification of it. Like you said, obviously a lot of rumors, a lot of speculation and conjecture flying about. Obviously a huge and significant event in and of itself, but the reality is if they had that kind of silver hoard or supply, I mean, 247 million ounces is about a third of annual mining supply, right? 800 ounces is typically what's produced in a year. It's not an insignificant amount. If it were, repossessed or expatriated or whatever the proper term would be, like if, the Russians got to it or if we got to it, whoever got to it first, I'd view it as extremely bullish, right? It just would further constrain the whole physical theme of, well, now there's a whole whack, a third of an annual, third of a year of mining supply is now in the possession of somebody else. It's not going into the market. Above ground silver, mostly you think is accounted for. So I'm not sure if there was this kind of big secret stash. Like I said, it absolutely could be the case. If if it did end up in anybody's hands, it's very, very bullish because it further constrains supply. Less supply and more demand is a recipe for much, much higher prices. So it supports that. Um, but again, like, will we get official confirmation from the Chinese or the Russians or even the US? I don't know. Maybe in due course. But I like to think that, either way, it kind of it's just another little piece of this puzzle, right? Of everyone's clamoring for this stuff, right? Everyone wants it. It's a strategic metal. It's a strategic commodity. It's in everything. It's money, right? Everyone wants this and are even willing to, stage a coup and, you fly it out of there in the middle of the night, kind of thing, right? So very exciting, very cool, kind of James Bondy, right up my alley.
Yeah, absolutely. Well, the predictive programming in, Hollywood entertainment is not too far off, right? They kind of give us comms about what they're going to do before they do it.
I know. Yeah, exactly. And we have many examples of that, as you know, right? So,
Oh, yeah,
100%. Yeah.
absolutely. Here's another interesting, I think, phenomenon. Let's see what you say. China stopped apparently exporting silver on January 1st. What is the impact on the global silver market with this policy being instituted? And do you see
Mm,
silver prices going higher because of it?
yeah. I do see higher silver prices. I do see that as playing a role. It's not a full ban, just like to kind of clarify. I like to, I don't like to feed into, not that there's misinformation on this, but there's just different takes, right? So I don't like to feed into the stuff that muddies the details. So they do export a lot of silver. They just put export controls on it. They're only allowing this new licensing regime is only allowing the latest number that I've seen is something like 40 companies and institutions that are involved in the refinement process and the exporting of silver. Only these 40 companies or so are now allowed to, under much, much stricter conditions, those licenses and permitting, that permitting could be pulled, right? It could be pulled on a flick of a switch. So they are tightening controls. They're tightening the belt or shortening the leash on, again, this very critical mineral, this very, very important resource that everyone is clamoring for. So because they produce, and we'll get into this, I'm sure, later as well, is because they produce so much of the world's silver supply. If they're just tightening controls, we just expect that there's going to be less coming out. And that's going to further exacerbate the issue of there not being enough physical to go around. So it's like every star is starting to align, every technical thing that could happen, all of it's aligning perfectly for, a silver price that some of us probably can't even imagine years from now. Because these supply and demand imbalances can take a long time, especially when it comes to like something that's physically mined out of the ground that you can't just turn those switches on either, right? It's going to take
Yeah.
years to resolve. But so at the end of the day, like, yeah, they stopped exporting as much. It's not a full-on ban. We don't quite yet know what the real impact will be to the supply chain and the flow of silver out of China, but it's certainly from the most simplistic sense, is going to really clamp down on the availability for the rest of the world because so much comes out of China. So,
Yeah, absolutely. Thank you for that. And I do have a follow-up question on China, but before that, just to react to what you said, because I remember on our last podcast last month with the holiday season, you were, and that's fine. You take a more conservative, measured approach, which I'm sure your clients obviously appreciate. But you were sort of not sure how quick the spiral would happen of silver, but I think even you can see that it's going much quicker
oh,
than we anticipated.
yeah, I'm a little bit in disbelief myself, right? Like I've been buying this stuff for 8 or 9 years now, like 2017. So I'm trying to do the math. I think it's 9 years this year that I've
Mm-hmm.
been stacking. Tons in that thing behind me, a bunch in my desk that I play with all the time, big vaulted account in Dallas, Texas, where we keep our clients' metals. Was actually able to go and see and touch and hold my metals in Dallas actually just at the beginning of November, which is really cool. Maybe sometime we talk a little bit more about that. But I am like, geez, the stuff that I said would happen 5 years ago and no one believed me is actually happening now and at a rate that even I have a hard time believing. But
Yeah.
when you have a market that's so suppressed for so long, you just have again that like supply demand imbalance is now just it's switching the other way. So you have a really quick correction and it can take a long time and we can see much higher prices before things do balance out. But I'm shocked. Like we had like I mentioned, 10% day in one single day up and then 10% day down and then 9% up and then 9% down. We were up 35% in December.
Wow.
We're up 50% in the last like 2 months, 2.5 months. And silver, I think, was 160, 70% for the year.
Mm.
Right now, um, I give my clients two kind of scenarios. One where we get to a new price discovery situation where silver is fairly valued in a short term. And then there's like we can get to fair silver prices in a longer term. So it could come at us really fast and we could see something like, you know, two, three, $400 in the next couple of years. Or you could see, three, four, five, $600, maybe in like 5 plus, right? So is it going to come running at us or is it going to be kind of a marathon, not a sprint? I don't know. So far, I'm blown away. I think we have a lot more to expect this year, and I have a
Mm.
feeling it's going to be maybe quicker than we hope. That's what it's telling me.
I agree with you, and if you don't mind, if I just interject on that, because this
Please.
is that well, we're coming into a year where we have a victory day on the 4th of July. We have the midterms. We have all this stuff. My audience knows I preach a lot about the global reset and its
Yeah.
implications on the foreign currency market. Nasara,
Yeah.
obviously, the metals play the hugest part of it, particularly silver and gold, as you know, and even copper. We'll talk about that later as a backstop once silver
Yeah.
runs out, because then we
Hmm.
talk about a delivery issue, all too well. I will not be surprised if President Trump audits the Fed and Fort Knox and shows people we have more gold than we think because of the
Hmm.
COMEX LBMA underground
Yep.
mining. With China in the mix, he's going to try to territorialize that whole thing and protect the U.S. as he should. And he revalues gold and silver goes along with it as sort of a slingshot because of the years and years of suppression, right? Every action has an equal and opposite reaction. I wouldn't be surprised if it's $300-500 this year. I really wouldn't, just because of how things are going.
Yeah, I agree with you, and I don't mind naming other people that I really respect in this space. So there's a
Please.
guy, Michael Oliver,
Uh-huh.
momentum structural analysis.
Yep.
He's not a silver bug. He just looks at momentum charts. So instead of looking at the price, he basically looks at, underlying m momentum, and he has kind of a patented way of looking at things. And I've been following him for years. I subscribed to his thing for a long time, and he called 2025 very, very well. He's saying two, 300 in the next few quarters is like, and this isn't one of these sensationalistic, like the sky is falling, you have to, he's just a technical guy. He's just kind of a nerd, right? Just looks at charts
Right.
all day and charts actual, like, underlying momentum. And I listen to that and I go, well, buckle up because if that's going to happen, it's going to really get pretty crazy pretty fast. And people, I've been calling a lot who've made a lot of money with me over the years, and they go, I really want more. Is it too late? And I go, well, 80 is obviously expensive, but three, four, five, six, whatever hundred, maybe if these price levels are possible, then no, there's not, it's not too late, right? I'm buying still. I don't hold cash in the bank more than what I need to clear my bills every month. So I am like a long-term slow stacker. I do buy in kind of bulk when I can, but then I just kind of every month, whatever's kind of left over, I'm adding to the stack. I don't want any more in dollars that I need to have to kind of cover the kids and my family and the stuff that we need. So
Mhm.
I'm buying here, right? I've been buying since 11 and 12 bucks. I'm buying at 82, 83,
Wow.
84, right? Like it's maybe hard to do it sometime at points, but um, no, I agree with the potential that this year has for us and for silver's price.
Yeah, and that's telling because you're a pretty conservative guy from what I know of you. So if you're seeing that, that's especially your clients know that's a big tell.
Yeah.
We're talking about China. Up till now, China's been refining 60 to 70% of the world's silver supply. With them effectively closing their doors on the global silver market, how will the world negotiate the absence of this critical process? How will this effectuate the rest of the world? And will the refiners in Switzerland be able to take over the shortfall? Because as far as we know, the US currently does not have any silver refining capabilities or capacity.
Yeah, it's really negligible here. Like North America doesn't have a whole lot of output. Like we're talking like peanuts. Like you said, 60, 70 on the high end for China. Swiss refineries are a big part of the mix, but they can't ramp up production fast enough or expanding production fast enough to offset what might not be coming out of China. On our last show just a few weeks ago, John, we talked about how it's like kind of like a war that's going on, right? It's like who can acquire more strategic resources, whether it's gold, silver, rare earths. Like this stuff kind of all is blending together. It's like a program of it's a game of risk. Who can get all the best, most strategic deposits, refining capacity, whether it's Russia and uranium deposits and uranium enrichment capacity, or if it's silver refinement and production, like with China, like we're seeing them clamp down on these really precious things. Um, it just adds to the thing we've been talking about since the beginning of this show, which is just like physical possession is 9/10 of the law. You want it in your hands, you want it in your segregated vaulted account. However you want to take it, you just want the physical thing. And so if they start playing games where we said yeah, the export ban is of the first, but they're really still releasing it. Some, we just don't know how much, like how much is going to be dwindling from that 60 to 70%. If they cut it in half, we're in trouble really fast. If they just, stop it altogether and everything's kept internally, then we're in like bigger trouble even faster. So it's just like, we got to kind of deal with the market that's coming at us. It feels like a bit of a freight train to me, John. I gotta say, like my biggest fear is not that we won't have enough demand. Like I've got tons of people who want to buy silver right now. Missing calls when we're on the show, but I actually love it because these shows make the phone ring. So thank you.
Right.
Um, but it's not that I don't have people who don't want to buy it. It's that I think like I said, maybe it's 6 months, maybe it's 3 months from now, I might not have any to sell you. So I just don't want that. That's my biggest fear as a dealer or a broker. So all this stuff is adding up to really one thing, which is like, don't wait. The price is still actually pretty low. The supply is still very good, but that's not going to be the case if all of the major supply sources like China's 60 to 70% of global silver refinement, if that's getting cut off or cut in half, going to be problems, right? Big ones. So, I mean, I'm bullish. I'm even more bullish because of it, but I'm glad I own what I own, right? And I'm sure you do
Yeah,
too. You are too.
absolutely. Well, it goes back to what we just alluded to a moment ago, Micah, delivery. You know,
Yes.
you're what you're really hedging, in my opinion, is money against time, right? The way when I have friends that say, "Oh, should I, John, should I buy silver here or there?" I'm like, look, it's like we both live in California for the moment. We have to deal with the freeways here, and
Yep.
it's like when you're merging on the 405, for example, that everybody knows, or we call it the 4 to 5, depending when you get on with traffic. You want to get.
Oh yeah.
We say here, folks in California, you want to get on after 10 and before 3. That's kind of the
Yeah.
rule of thumb here. But anyway,
Exactly.
which you can attest where you live. But the point being
Yeah.
is look at precious metals, folks, as an analogy. And I want to get your take on this, Micah. A lot like merging onto a freeway wherever you live. Just get on when you get on. If you got on before rush hour, great. If you get on during rush hour, oh well. You got on after, you're still in the game versus sitting on the sidelines trying to rhythmically time the position in your favor. At
Oh,
this point, that ship has sailed because, like you said, unless you were buying years ago at $10, $12, just get in now because of the supply issue. Is that a fair
yeah. And
analogy?
it's burning a lot of people because there's like kind of a recency bias too. So I've got clients who've been with me for 5+ years. They have a lot that they want more, but when we got to 50 in October, they're like, "Oh, just like last time. We're going to hit 50, we're going to come back into the 30s. Maybe it's high 30s, but we're going to come back into the 30s. I'm going to gobble a bunch up, and then it's going to fly." Well, it didn't do that at all. It hung around 50, it dropped down for like maybe 1 or 2 trading days, and then 60 was in like a week. So like, oh geez, I'm still waiting for the pullback. I'm like, you go ahead and do that, but I don't think it's coming back. Maybe it does because I don't know how the market's going to go. But they're basically like, okay, well, I'm going to wait. So then, you know, boom, they put in at 65 and they think, oh, I had to buy so much higher. This is terrible. Like I should have, I should have got it before it crossed 50 because it never pulled back. And they think now that I'm buying at 65, it's definitely going to drop. Well, it went from 65 to 80 in what, 2 weeks, right? So people are like, oh my gosh, what's happening? And this is again the surprising part of it for me. No point in timing it. You're not buying it as a trader, right? You're buying it, I hope, as a longer term buy and hold, 2, 3, 4, kind of 5 years, kind of on the minimum. So like you shouldn't really worry too much about your entry point because the flip side of that is, yeah, price is what you pay today. You might get that pullback in 2 months, but I might not actually have any product to sell you. So it's why I tell my clients not to trade their physical. You could have a trading account where you do a small portion of your portfolio in, mining stocks or ETFs. I don't believe in that stuff, but if you want to, go for it. But you don't trade your physical because let's say we go to 100, and I think $100 silver is probably a thing for, and I can't say this, like knock on wood, don't hold me to the fire on it, but like maybe end of January, end of February, like I think we're within 4 to 6 weeks of $100 silver. You might think you're going to sell at 100 because it's going to come back to 80, and it may very well do that. But if everyone's buying the dip, which is what's been happening on all of these really small intermittent corrections, even like today's a good example. We were at 80, went to 76, now it's 79, right? It's just bubbling up every time it goes down, boom, it gets bought. So if you're thinking you can time it and you want a certain price, well, you're gambling with what's available. And if you sell your stuff at 100 thinking it's going to come back to 80, you can get back in, you might not. So you don't trade your physical, you just buy it. You buy it now because you know the trend for the next several years is much higher. That's it. That's all you're doing. And it's not just where you're making money with this stuff. It's also big time insurance. You're de-risked out of the banks, you're de-risked out of the currency, you're de-risked out of any kind of counterparty risk, right? No people or debt or loans or instruments or shenanigans happening on the other side of your silver bar or gold coin, right? So all these reasons, it's just sure you want to do your due diligence and be ready emotionally and financially to make this type of move, but once you've decided you kind of need this stuff, just do it. Don't wait. Call me. Call my colleagues, right? Call us up.
Yeah. I'm really glad you said that. Thank you, Micah, because we're sort of telepathing or telegraphing our thoughts because
Same thing. Yeah.
same thing, because I was thinking along the same mind frame as you, because a lot of people, I think they thought, well, silver will never get above 50. Then it did, as you said, Well, it won't go above 70. They keep, it's like they're
Oh,
painting themselves in a proverbial corner, but it just keeps the leak just keeps growing in the house, if you will, like a water leak or something. Oh, I've contained it to this area, but you didn't. It's going to
yeah,
grow
yeah,
wildly
yeah,
out of
yeah.
control. Think,
Exactly. If
thinking,
I'm right about if I'm right about 100 in January, February, think it was 50 in
and
October,
I think
right?
you are right. Yeah.
Well, I kind of don't want to be, but I think that's what I'm sensing, and I think that's what I'm seeing in the charts. Of course, I could be wrong. I'm open to that,
Sure.
but if it gets to 100 in my kind of time frame, then it's really like from 50 to 100 in October to February. That's what, 5 months?
Well, I mean, look at what we just talked about, Mike, a moment ago. Look at the spread disparately between the UK, China, Japan. Why
Yeah,
is Japan? Because their yen is tanking. They're holding a lot of our uh, you know, Fed
treasuries.
treasury
Yeah,
notes that they're trying to dump over and replace with gold and silver because they know the
yeah,
writing's on the wall.
yeah,
So they've been
exactly.
holding a lot of our toxic debt for decades, and they see what's going on. So if it's, do we really think in America it's going to be contained there? No, it's coming here.
Yeah,
So to your point,
yep,
so my point being is, if people are thinking, well, I've made fool's gold, so I'm going to tap out at the top at $100.
right.
Here's the other thing, Mike, I want to talk to you about. We
Yeah,
have an interesting phenomenon in addition to your earlier point about backwardization. For the longest time, I think people have been, I would love to get your thoughts on this, obviously. We have this perception that metals are on defense. They hedge against inflation, which is a hidden tax.
hmm,
They protect your wealth. But now with cryptos like XRP and XLM, Stellar Lumens, which is pegged to silver, as you know, now you have a phenomenon whereby metals are being pegged to these cryptos. The cryptos are actually making the metals on offense to make you money and profitability, particularly if you've been stacking for a while or just planning to continue to add to the extenuation of what you have. What are your
yes.
thoughts on that?
Yeah, I'd start with a more general kind of answer. So, the kind of metals-backed cryptos and stuff, I think that that's positive because it is kind of a way of opening up new markets and having more inflows. And people who were making a bunch of money this time last year in crypto, they're not having a very fun, or didn't have a very fun end of the year, unfortunately. And of course, we have a sister company, My Digital Money, founded by Colin Bloom, that does the crypto side into IRAs and for normal purchases as well. I, though, personally have just never been a crypto guy. I'm a bit of an ideologue. Like, I don't touch stocks. I don't do anything. I've been a metals guy for better or for worse for, like I said, like 10 years or whatever the case may be. Now, it's turning out good for me, but I think opening up like new markets and access to new markets through some of these avenues, like tying tokens to a certain amount of silver and having some digital component to it, that's all fine. The first part of your question, which was they are insurance, that is one function, right? Is you're out of the dollar, you're out of the bank, you're out of the market. They're typically counter cyclical to the stock market. So when the stock market is down, the metals are up. And what's interesting is like stock market's pretty much at an all-time high, and the gold price and silver price are at an all-time high. You don't normally see that, John, unless there's actually huge underlying problems with either the economy and or the stock market. And because they're counter-cyclical, like when the economy is great and business is booming, you want to own stocks because they're doing fine. There's no reason to own gold or the insurance side of the metals, right? For safety, who wants safety when everything's going gangbusters? But if you see a gold price and the stock market price at all-time highs together, like we did the last time, other than right now, the last time we saw that was guess when?
2008.
Right before '08. Exactly. Good
Yeah.
answer. A plus. So what that is indicative of is a rotation of capital. It's the smart money. It's the banks, it's the hedge funds, it's the billionaires, it's the big guys. They're rotating out of an overvalued stock market into gold as insurance, and that actually pushes the gold price alongside because they're selling to kind of the bag holders, right? The people who FOMO into the stock market right at the very end. And I'm not saying the stock market's going to crash right away. I actually don't think it would until probably closer to the midterms. And just as a side note, I'm sorry I'm not getting to your question super directly, but it could go either way. I think like either the deep state does everything they can to throw a wrench in Trump's spokes to try to cause a massive stock market crash going into midterms to give him problems, or which I think is probably already kind of happening, is like
Mm-hmm.
Trump's going to appoint a very accommodative Fed chair. They're already been cutting rates. They're already kind of doing QE. They're going to just ramp all that stuff up to kind of propel the stock market to new highs going into the
Yep.
midterms, which will basically be like, hey, why wouldn't we, get another license to do more of what we're doing? Look at how great everything is. And so I think it could go either way. I'd obviously prefer the latter. I think the metals are going to do fine either way, right? Stock market crash or no stock market crash, the metals are on a trajectory, especially silver, that's based on fundamentals. So we'll see how that plays out. But there is a time and a place to own the metals, and they are the least amount of risk you can possibly take. They can never go to zero. They have no counterparty risk. They are physical. You can put your hands on it. You can put it in your gun safe or in your vaulted account or you know, the safest asset ever. And obviously going back and having that kind of reputation for 5,000 years, right? The oldest, most time tested, makes it through and out of every single reset and depression cycle, everything. But at the same time, when all the roads lead to gold, so dollars are going down, not just dollars, but every currency is going down the drain. Every central bank is printing money like crazy. Every government's way too bloated with all the debt, and we see some kind of debt jubilee or debt cycle, global financial crisis, global financial reset. Like the only thing you want to own is gold, and everyone's making that play. Except still, it's just the big guys. It's not really you. Well, it's you and me, but it's not people like us yet. Um, so that's what also tells me we have so much more room to run.
Mhm.
Still, all of the gold, all the silver, all the mining stocks, everything gold related, it's half of 1% in portfolios, John. I've said that to you before, but I need to keep underscoring that. We'll get to something like 3 to 5%, in my opinion,
Mhm.
which is still 6 to 10 times more money needing to come into this space before we're kind of in that fair valuation. But we could get to 10, which is where we were at in 1980, which would be 20 times the amount of money coming into this space.
Mhm.
And we could get to 20%, which is what the big hedge funds or big banks and Wall Street's now suggesting as the new portfolio makeup: 60 stock, 20 bonds, and 20 gold. So the time and the place to own golds right now, with all these little things going on, they're the best insurance, but they're also the best performing asset class of anything, of everything. It's like, why would you not choose the safest and the one that's going to make you the most money, right?
Yep.
It's a win-win-win. But for some reason, we're still only like, I'd say 60% of our business is repeat, right? It's clients who already own it who are buying more. That's 60% of what's going on right now with how busy we are, right? We're seeing new clients, of course, but they're still kind of slowly trickling in. I'm going to be looking at the time when we're at like 90% of our business is all new people. That might be an indication that we're somewhere near a top.
This is good.
It's the other way. It's the other way around, right? Like
Yeah.
the vast minority are new clients. The vast majority are repeat clients.
It's a good synopsis. Thank you. Thank you for that, Micah. Because
Yeah.
my concern, obviously, as I look at things on my channel, is that for our audience is uh, I think sometimes there's a space for two things to synonymously happen at the same time. It doesn't have to be an either or. In other
Yep.
words, I see there being a major market correction coming because he's going to blow up that bubble, the old Fed system, and he's using this guy Warsh as a temporary thing. Like you said, he's pro crypto, pro low interest rates, print, 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 bring it down to zero. And you're blowing up that bubble between, it's almost at 50,000 now, the stock market. And I think when it gets between 50 and 60, you also want to look at the S&P as an indicator, right? I'm
Yeah.
toward our team when it hits between 7 and 8, that's a good indicator of the crash. As you said
Yes.
earlier, metals
Oh,
are
yeah.
going to do great either way. They'll do even better with that. But then what he can do at the same time is do this, as Dave talks about next 22, this transitional parallel economy, whereby he just, it's like, I call it the stadium analogy.
Yeah.
Football game, whatever, and at the end of the season, they turn on the lights of the new stadium and they demo the old stadium during the off season. And that's what I think Trump is kind of doing, is he's just doing this as much as he can, this gradual
Oh, yeah.
transition into, a U.S. note backed by gold with a gold revaluation and a silver revaluation, which will follow, will find its way
Mhm.
to the global reset with all these different currencies. And it will
Yep.
be this multi-pronged approach. So my concern is that a lot of people are holding paper, 401ks, IRAs, pensions, backed by essentially nothing except the illusion of something. They're holding
Right.
paper. On the other end, the company's actually holding the asset. I think we've had so much conditioning over the years that the dollar is king, that people have a cognitive dissonance with, I can't disconnect from the dollar because that's been the standard until it
Exactly.
isn't. And it's
Yeah.
not about, this isn't about fear. This is about proactivity and education. I want people to know that. But
Yep.
you, who's a subject matter expert, does this every day, all day for over a decade, bring invaluable, insight to that. And you're more of a conservative hedge better. So I think when you're even starting to, verbalize that distinct
Yeah.
possibility, I think that speaks volumes.
Yeah, me too. And it's kind of like, oh geez, when I start to get really excited, is that maybe like maybe a short-term pullback indicator? I'm kind of joking here, but like I usually don't get too excited, right? I've been telling people for years, $200 and $300 silver will happen. And actually my roadmap for that, I still don't change it too much. It's just that, like I said, there could be a faster version or a slower version. I would prefer the slower version. You allow more people to get on. The train doesn't leave without a bunch of people being on board. Right, if it happens really fast, you have a lot of people who are just in stasis, like, should I buy? Should I not buy? Like, they
Right.
might not get in until a lot of those people might not get in until 150 or $200 silver. But I've been saying for years, and my clients can attest to this, like $200 to $300 silver will be kind of a cakewalk. I think it's somewhere between 2028 and 2030. And what I base that on is like, I think we talked about this on our last interview, is we'll get to $10,000 or so in gold, right? I think that's a very low target. You hear some people saying much bigger numbers.
Yeah.
That only requires gold to double over the next 3 to 5 years. It's more than doubled in the last like 20 months, right? So from March of 24 to now, it's gone from 2,000 to 4,500. So if it just does what it did in the last 18 months over the next 5 years, you get to about 10K in gold. Now, the gold to silver ratio, as you know, at one point last year was at 100, right? Sell your gold and buy as much silver as you possibly can at 100 to 1, but now it's quickly depreciated, which is obviously a manifestation of the silver price shooting up so much. It's sitting around 58, if I'm not mistaken. We'll get to something like a 30 to 1. That's kind of my conservative target there at 10K gold. That's $333 silver. It could be 20 to 1. And if we have, $20,000 gold, that's $500 silver. So we just need to figure out where we're going to go. Um, it's hard to say now, but again, these reasons for me getting excited is because there's just so much happening at one time. What's that saying, John? It's like, there are decades where nothing happens and then weeks where decades happen, right? And I feel like
Oh,
that's
yeah.
really what's been going on the last 6, 8 weeks is like, what is happening? But
Mm.
it's real. It's very, very real. So we need real assets to protect ourselves in
Yeah,
this
it's
kind of situation.
like feast or famine, basically, to your point, it's kind of where I think we're headed. And as you pointed out earlier in the show, we're going to see things, we're already seeing things we haven't seen. And if this is any indication how the year is going to go, who knows where it's going to be, by the time the year's over. So,
Yeah.
interesting.
Now, not to put any crazy predictions out there, but the infamous triple digit silver, right? Like everyone's been waiting for that, saying it would never happen. I would always said it would. It just, what kind of time frame? Triple digit silver is a thing for this year, in my opinion. And like we just talked about, $100 could be a month or two away. We could see, just a repeat of last year. Went from 28 at the low or 26 at the low to 76 to finish the year. So like almost a triple basically in the silver price. I think even if we expected a double from 75 to 150, that would be nice. I think that's more than within the cards, especially with all the things that are aligning on fundamentals here. So we'll just take it day at a time, and I'm always happy to come back on and provide these kinds of updates and stuff. And I do encourage people to call me too, right? A lot of
Yeah.
this talk sounds complicated, but at their core, gold and silver are like the simplest, oldest, easiest asset class to be in. You just buy it knowing that you need it, and then you hold it, and that's it.
Yeah.
And you got someone like me you can talk to weekly, monthly, quarterly over the course of the ownership and the life of your account, right? So it's easy to have somebody who's there that you can rely on, like me or my colleagues. So
Mhm.
Anything
Yeah.
else you want
Yeah.
to cover, John?
One other
Yeah,
quick question for you to wrap this up. Yeah, it's God's money. It's as old as time, as you've been talking
that's
about
right.
throughout the show. This actually came from a subscriber. I thought it was an interesting question. So, excuse me, as silver outperforms gold, what
Mhm.
advantage is there to swapping silver for gold if the ratio is low?
Yes. Okay. I like this question. Again, it's part of what I talked about a few minutes ago with the gold to silver
Mhm.
ratio getting down into, let's just say my minimum target again, 30 to 1. For my clients who in May were buying silver and selling their gold at 100 to 1, they ended up with, or let's just round for the sake of math, 90 to 1. Let's say that that's where they were paying this spring, early summer. So 90 ounces of silver for the price of 1 ounce of gold. I think we're going to a 30 to 1. That's minimum. Could be a 20 to 1. Could be lower than that. There are single digit calls out there. There's calls for the average return to the average of 15. I think we just need to play it by ear and monitor it. And again, that's part of having somebody here is to actually like reach out to you proactively to say, hey, there's going to be an opportunity at 100 to 1. There's going to be another opportunity at 30 to 1. And the reason you buy silver at 90 to 1 is you'll get 3 ounces of gold for the same amount of money. You'll triple up the amount of gold that you could have originally had for the same amount of money that you outlaid. So if you bought gold at 90 to 1 instead of silver, you'd only ever have that 1 ounce, right? That's going in the vault or that's going in your IRA account. That's all you'll have. But if you bought those 90 ounces and we do trend down over the next couple of years to a 30 to 1, you sell your silver or do what we call an exchange, same day process, boom, boom, sell it, buy it. The exchange gets you 3 times more gold from 90 to 1 to 30 to 1 than you would have originally purchased. So you're like either making 3 times more money or owning 3 times more gold. That's why I'm a 90-10 silver to gold portfolio guy. I've been like that forever. I either want to make more money or own more gold. The path to that is through silver, but silver has its drawbacks. So to your subscribers question, it is more volatile. It's like a roller coaster, right? It's spiking up and down 10 and 9% a day all last week, right? Gold wasn't really moving all that much. It was up and down 2 and 3%. So think of silver as leveraged gold. It's like, you get a multiple more, 2 to 3 times more return in silver than you do in gold. That's kind of a common way of looking at it by the time the precious metals bull market is done. That's what she normally kind of does. But when we get down into these lower ranges of the gold to silver ratio, in a normal precious metals bull market cycle, it's actually an indication that we're getting close to the end. And what you probably want to do at that point is if you've either made 3 times as much money or you want 3 times as much gold, you switch it over so that you're reducing your risk or your volatility, right? Because silver always spikes. Gold doesn't. It's way more stable, especially over longer periods of time. So you make all this much more money in silver, and then you turn it around and flip it into 3 times as much gold on that 90 to 1 to 30 to 1 example, and then you leave it in gold for as long as you need to, right? And you have less risk, less volatility, and you're locking up your profits in the more stable of the two metals. Now, not to make it complicated, but I'd share with you there's like something I'm struggling with is will we have a normal precious metals bull market where they hit these peaks in the next few years and then they correct by 50% and go sideways for 10, right? That's kind of what happened in 2011, right? Um, 2008, $700 gold, 2011, $2,000. Gold tripled in 3 years, but then it crashed by 50%. So if you held from 2011 to 2024, 13 years, it finally broke out above the price you bought it at. Um, that's one scenario is that the metals will peak. You'll want to make that swap. You want to hold some gold forever. But the other scenario is like gold and silver get remonetized at these much higher prices and just go flat forever at those levels, right? If gold gets to 10K and silver gets to 300, and those are my, low end targets, instead of correcting at that point after hitting those peaks, they could just flatline at those prices forever if they're being remonetized. And I'm more inclined to say that that's probably the more likely of the two scenarios. I don't think we're in a normal cycle. I think we're in a global cycle, a financial reset that's going to prioritize gold and silver. And so I'm definitely, and this has been my plan all along, regardless of which of those scenarios you get, I'm young enough that I'm going to, with my 90-10 silver to gold portfolio, switch over at least 50 to 75% of my silver into gold. And I'm probably hold back some silver forever just in the event that we do get to these crazy, like, silver gets to par with gold type of scenarios, right? I'm sure you've heard those. I don't think that it's extremely likely, but if it happens, I'll always hold some back for the event that it does, right? Be nice, nice little surprise. But yeah, that's why you would do it. I think that's at least my personal strategy, which I encourage a lot of people to consider doing too. It's just where you're going to make more money, own more gold, and then lock up those profits and have a more stable portfolio going forward, especially if we don't have a normal cycle and we just have this plateau at a much higher price once gold and silver are remonetized, which I obviously believe is where we're going.
I completely agree. And it's a great articulation of a fairly intricate question. It seems simple on its face, but there's a lot of nuance, which I appreciated you broke down. And I'm
Yeah.
inclined to agree for whatever it's worth to you that I think with the global reset coming in, going back to an asset-backed standard, as you mentioned, that's, I think President Trump has every intention this year of revaluing, because gold is not $42 an ounce. We know this. I mean, everything flies in the face of that. So it's just bringing everything up to modern par,
Oh
and
yeah,
gold and silver, I think, stand to gain tremendously in everyone who's either going to invest or is investing it, as you said, on an ongoing basis. So
absolutely.
I appreciate that. So as we conclude this podcast, so you actually worked with, I'm going to ask you the normal stuff. Like you're our chief sponsor. So folks, if you go to the link in our description or below the video, noblegoldinvestments.com/JD Metals is my code. You'll get the best pricing and service for someone like Micah. You actually handled someone who came from this podcast who called in recently. So you personally worked with them, which
Oh,
is
and
great.
I was so delighted too because they asked.
Yeah.
It's funny because I don't
Yeah.
normally pick up the phone. We have a whole reception team.
Right.
My reception team patches my clients through, or anyone who calls and asks for me through, which is great. It's a great system.
Mm-hmm.
But during the break, we're on a skeleton crew, right? Half the team is off, half the team is on. Everyone's taking calls. I took a call. It's like, hey, this is Micah from Noble Gold. How can I help you? They're like, hey, you're the guy we just saw on John Dowling. And I was like, oh, that's amazing. And I was like, well, you got me. You got me like first ring. Boom, here we go. How can I help you? So it
Yeah.
was amazing for me. Happy to help anybody. Just have a conversation. Obviously, no pressure. A lot of companies want to call you. Once they've got you in the database, they'll blast you like 10 times a day. I don't chase people, especially not in this market. You don't really have to.
Mm-hmm.
I kind of suggest people that are inclined to make some kind of decision, again, not to create a false sense of urgency, but do it sooner rather than later.
Yeah.
Price is one thing, supply is another. Give us a call. Ask for me, ask for any of my great colleagues. So
Yeah.
yeah, we've got a promo this month. I actually have to probably refresh myself. Last month it was 10 free ounces of silver for qualified accounts. This
Mm-hmm.
month I think it's the same thing or the same amount of ounces, but a different coin. I have to check it. I have to uh, regretfully admit that I just been too busy since it got back 2 days ago. I'm just kind of digging out from under stuff. I haven't even refreshed myself with the promo, but I
Sure.
think that's what it is. Call us and I'll be able to confirm that for you. No problem.
And that's for qualified accounts, correct?
Yeah, exactly. Which means you have the right type of account that we can roll over,
Mm-hmm.
and we'll walk you through the other finer details. There are some, but it's
Yeah.
very straightforward. Yeah.
So folks, if you're just doing retail metals or you have a 401k or an IRA rollover, I've already heard stories working with Noble that they've worked miracles for people who thought, oh, I'll never be able to get that out, or it's going to take forever, and they found out to the contrary. And what I also love about Noble is the education and the guidance that they give you in a very unbiased, familial level, which is hard to find in my personal opinion out there. So whether it's Mike or anybody else, please do reach out and let them know that you did hear about them through our podcast. We do have a form as well you can fill out and just put our name so that they know proper communication. So Micah Haince from Noble Gold, thank you for being here today, good sir. Thank you for answering the questions with such specificity. We appreciate your time and professionalism, and we look forward to seeing you in the near future.
John, appreciate you so much. Have a great, healthy, happy, prosperous 2026, and same to all your audience. So thanks for having me on, and we'll see you next time.
Sounds good. Take care, brother.
Cheers. Bye, man.